topic, yeah, speaking of my mind, the other topic we wanted to discuss was whenever somebody reaches out to us and they're looking for a quote on interest rates and they're saying, this lender gave me this interest rate, this lender gave me this interest rate. What is it that determines the individual's interest rate that they're going to get on their actual loan versus the advertised rates and so on? What are those specifics that determine that?
Yeah, and I want to piggyback a question on that real quick. Why we can't believe the number on the postcard that we get in the mail is definitely our number, like a coupon.
It used to make you so mad when you were lending.
Because it's very generic. It's when somebody asks what's the rate today, I want to ask how much houses cost in Virginia, right? So
Yeah.
I mean, it's such a broad question, and there's so many things that can affect the interest rate. Right before this our meeting with you guys, I was talking to a client who asked me the same question, and I said, I hate giving you a quote right now without doing an application, because there's so many things could affect it, not necessarily in a bad way, but in a good way. And so I'm gonna give you this rate right now. You're not gonna like it, and if I would do the application, I could find something better for you.
Yeah.
So and it doesn't cost you money, it doesn't cost you anything to do that application. So it always encouraged to do it. It's for clients' benefit. Maybe they'll spend 5 extra minutes completing the application, but at the end they're gonna get better deal, better rates. To me it makes sense. But let me share this with you. So what does affect interest rates? Obviously, the credit score, right? So we have different tiers for if your score is 780 and above, you're gonna get the best deal. For some programs, even 740 and above is gonna be the same. Some do have little adjustments to rates. If the score is 780, then we go to between 700 and 720, and then 680 to 700, and so on. The lowest credit score that we work with on FHA loans, for example, 580, on conventional 620, and of course, the lower the score, the higher risk for the bank, and higher the interest rate. The down payment plays a big role as well. We're gonna put 3% down, we put zero money down, 5%, 10, 15, 20, 25, 30 sometimes. When you put more than 30, it doesn't make the difference. In some programs, putting 50% down makes the difference. So it all depends on the program and on the loan amount, because we also have the loan amount tiers. We have conforming loan limits, we have high balance conforming, we have non-conforming, or also known as jumbo, and those, depending on those loan amounts, you're gonna get different interest rates, and different down payment requirements and credit score. So that plays a big role. And type of property, believe it or not. So if we're looking at condo versus townhouse or single family home, the interest rate could be higher than townhouse and single families. Or if somebody is buying a modular home, also could have some effect on the interest rate.
And there's an interesting point I want to make on your type of property with the condo and townhome. What's so interesting that a lot of people get really, really confused is a condo is an ownership type, right?
It's not a structure.
It's not the structure. So we oftentimes will show, as a matter of fact, we even just sold one. It was a townhouse structure, right? So a connected multifamily connected dwelling that had an HOA, which is like just a homeowners association, but it was also set up as a condo structure. And so that
Condo ownership.
would be condo ownership. So that would be what Tatiana's talking about. Like it might have a higher interest rate because of the condo ownership structure and not necessarily the
building
housing
structure.
physical building structure. So
Yeah.
that's always a source of confusion
Yeah.
for a lot of buyers.
It is a great point, exactly, because
Good job.
good job. Sometimes I see even single family dwelling as a condominium. We don't
Yeah.
really have that like here. I don't think Virginia Beach, for example, does.
Okay.
So, but that's, yeah, it's just a type of ownership, just
Yeah.
like co-op, for example, right? It's
Yeah.
also, that's also different.
Yeah.
We can do a presentation on condos.
We should do that because that's a lot of things that confuse. I have that conversation
should,
all the time,
yeah.
especially if I'm in a townhouse that's a condo. The
Yeah.
buyers, they just don't get it until you explain it to them. So
Do you loan on co-ops
We do in DC.
in
Okay.
DC? Okay. All right. Sorry.
Yeah.
Okay.
we're tangenting all over the place today.
I'm
Okay.
gonna jump over one bullet point and talk about location.
Okay.
Okay.
Location also could have effect on the interest rate, and actually it kind of goes together with type of property. So in some locations, condo does not have any adjustments, the rate on condo. But in some locations, there are adjustments to the rate with a condominium. So, and in general, location could positively or negatively affect the interest rate. There are some programs right now available that gives better rate and also has some additional perks depending on not only where person is purchasing, but where person is living at. So that's why I'm saying, there's always some new programs come out that some lenders have, some don't. And it's always better to do the application, because when I'm quoting someone, I don't know where they live, right? And I'm not gonna, like get all that information. That becomes an application basically.
Yeah, right.
Just to give a little quote. That's why it's always good to do the application.
Yeah.
To get accurate quote. And occupancy type is a huge factor. What are the types of occupancy? We have primary residence, we have vacation home, or also they call it second home, or investment property. And depending on the type, the interest rate is going to be different. The cheapest one is a primary, then vacation home and investment property, they typically have the same rate, and it's higher than on primary residence. But there are some options for vacation homes with a lower interest rate than on investment property again. So there's so many different options and programs that but it definitely, occupancy type is a huge deal.
It's almost like the more skin you, the borrower, has in the game, the lower your rate will be. They figure you would walk away from a vacation home quicker than you'd walk away from your primary residence, right?
Right, and or you choose to make payments. If you're struggling, you'll choose make payments on the primary home versus on vacation, because you don't want the bank to take your primary home. You live there, right?
Right.
And you will forego the vacation home. Okay, well, big deal. I don't have my lake house anymore.
Yeah. Well, I think so my visualization for helping people understand why it's so hard and almost not awesome to get those postcards in the mail with the blanket interest rates is because if you think about it like this artisan pizza restaurant, right? They don't do cookie cutter pizzas really, right? And you go in and everything is a la carte, all the toppings are a la carte. So you have somebody go in, hey, how much is a large pizza? And it's like, well, I can't tell you it's $10.99 because it depends on what you want on it. Just a pizza. Well, what kind of cheese? We have like 12 different cheeses. Do you just want mozzarella, or do you want like the high end flown in from wherever
truffle cheese.
Yeah, what comes, well, you know, just a plain mozzarella vegetarian pizza. Okay, well, great. What kind of vegetables? You know, well, green peppers are a lot cheaper than avocados, you know what? And that's what is it, what it is. It's like your credit score, what kind of cheese, your down payment, what kind of veggies do you want on it, your loan amount.
What kind of crust you want, right?
Yeah. And then the advertisement on the postcard's gonna say large pizza, $9.99.
Yeah.
But you walk in there and you're spending $35 on that pizza by the time you actually get it.
Yeah, when I get my favorite pizza, yeah, it's a really high pizza.
Yeah.
Or I'm like, I just want the crust, man. Like for you, $5.99.
It's a great example. You're full of great examples.
Oh, you don't even know. This girl is so good at that.
Oh my Lord.
I always lose arguments because she'll give analogies. It's like, okay, you win.
Thank you, thank you.
All right, but this is really helpful because we
Yeah.
do get this question a lot, and so we have, you know, new clients that'll ask us, you know,
Yeah.
hey, what's the interest rate, and then we'll always put them in touch with you. But now we'll have this video that I can send over to them as well, so they're at least prepared
Yeah.
for the conversation
And
with
I
you.
love this slide. Like I think this
too.
is.
That's a pizza
great.
menu right
I'm gonna-
there.
I'm gonna put little pizza icons on it though, and I'm Tatiana, I'm gonna give you a chef's hat like over in the corner.
That's gonna be the thumbnail, isn't it?
Yeah.
Yep, there you go. All right.
So it's agreed. I created one more slide.
Okay,
If you don't
excellent.
mind, I'm just gonna put it here. So it's gonna
Yay, we have contact info.
Okay, everybody, we're gonna give you a second to take a screen snip of this, save it, get in touch with her. She's amazing.
Yeah, yeah.